As the US government teeters on the brink of a shutdown, global markets are holding their breath. But there's another story brewing that could shake up currencies and bonds in unexpected ways. This week, all eyes are on India as it prepares to release critical inflation data on Wednesday and Friday, offering a glimpse into the economic pulse of one of the world's fastest-growing economies. But here's where it gets intriguing. Analysts from ANZ and DBS predict that India's headline CPI for October could plummet to a startling 0.2% year-on-year, a dramatic drop from September's 1.54%. What's driving this? A perfect storm of food deflation and a sharp nosedive in vegetable prices. But is this decline sustainable, or are we missing something? DBS economists argue that the worst of the food price declines might be behind us, with base effects likely to nudge inflation upward in the coming months. Yet, ANZ paints a slightly different picture, forecasting that India's core inflation will remain stubbornly high at 4.5%, buoyed by soaring gold prices. And this is the part most people miss. ANZ believes the Reserve Bank of India could still deliver one more rate cut in December, depending on how growth conditions evolve. Is this a bold move or a risky gamble? Trade data, due Friday, will also be under the microscope. With tariff tensions simmering, any signs of widening deficits or shifts in trade flows could send ripples through the markets. DBS warns that base effects and earlier front-loading might lead to weaker exports in October, while imports could ease from September's highs. But what does this mean for global trade dynamics, especially as geopolitical tensions continue to escalate? As we navigate this complex landscape, one thing is clear: the interplay between inflation, trade, and monetary policy will shape the week ahead. What's your take? Do you think India's inflation trajectory is a cause for concern, or is this just a temporary blip? And how do you see the US shutdown impacting global markets? Let's spark a conversation. Share your thoughts in the comments below.